But when everyone else is telling you something isn't working anymore, or it's bad, or it's not, a play anymore, that's usually the time to buy it, right? And if you look historically at gold has been a store of safety for thousands and thousands and thousands of years. So for some reason, all of a sudden people are like, oh, it's not even worth it anymore because Bitcoin's here. And the answer is no. Let's be fair. I mean, you got to go with the thousands of years that it was a store of value. At least as an investment, it makes sense. But yeah, you're right. That was a great call there. We did break out. We're now getting a retrace. I still think there's a little bit more downside here to go. So I do think that gold could pull back into this range, kind of a retrace to what we call the scene of the crime, which was the breakout. But the beautiful thing about this chart is that it is following to a T what happened in the 1970s. And I love showing this, and I hope you'll humor me here to just let me show this. So basically what we've had since 2018 is a market in gold that has had two legs to it. You had it move up from 2018 to 2020 and consolidation from 20 to 22. Now you're starting to break out. So remember this kind of pattern. Now what let's do is go to the 1970s, all right? And we're gonna go to the weekly chart here and go all the way back to that period. So bear with me. All right, here we go. All right, so in this chart, you can see that from 1973 to 1975, we had an up move here, right? Then you had the same consolidation for 2 years that occurred from 2020 to 22. And then look at what ended up happening here on gold. It had this massive, massive move up. And again, the reason a lot of people might be saying, well, why is he looking to the 70s? What does that matter? Well, if you go to inflation numbers, that was the closest parallel to the type of market we're in right now with inflation. So I love looking at history. You find out so much about history. I mean, we could go into other things. I know we don't have a lot of time, but like if you look at the chart of Amazon from the dot-com bubble, it's identical to Bitcoin's top right now. I mean, it's just spooky stuff. So right now, Bitcoin is following a classic pattern. It's basically what we would refer to as a bear flag. So you have the big move down from 69 down to 33. And then basically you're just consolidating in this area here. And again, if you looked at 1,000 of these charts with this same pattern, you would notice probably 75% of them broke sharply lower. So I do think that that's ultimately going to happen. Now, it doesn't mean we can't chop up a little bit more here and stay within this kind of band, but ultimately I do have more downside. I do think that the crypto market is due for a .com-type washout. If you look at like the meme coins, I mean, there's literally like 15,000+ cryptocurrencies right now, and it's just there's no need for them. There needs to be a washout, just like the .coms in the late 90s, early 2000s, and from there I think you'll get the best of breed to rise. But I do think Bitcoin still has a 20 or sub 20,000 handle coming probably in the next 6 to 12 months. So yes, it's been a great kind of range here. A lot of people are starting to get bullish. It popped up a little bit today, but don't let it fool you, folks. This is a classic bear flag pattern. Yeah, I'm super, super bullish. And I love you bringing that up because it's such a, everyone hears me saying, 20 or sub 20. They're like, oh, Gareth hates Bitcoin. He just thinks it's not even worth. And the answer is no, I think it's going to 500,000, $1 million. I just think you have to flush out all the crap first, right? You get rid of the crap and the best of breed. I mean, it's very Darwinian in that way where the strongest will survive. And Bitcoin there's no doubt that has become kind of the strongest one that most of the big money's playing. So look at this pattern here, right? And we'll quickly remember that pattern, just burn it into our brains. Now let's go to Amazon's chart and we're gonna go back quickly to the 2000 timeframe, right? I gotta flip to the monthly because it's so far back. But here's your Amazon.com bubble and bust. And you can see that the pattern there is almost identical to Bitcoin, a big move up, a big correction, a big move up, taking out the high, which is what Bitcoin did in November. And then look at the collapse down, bottoming at about $6. So 112 to $6. If that happens on Bitcoin, by the way, I think it's like a $4,000 price target. I don't necessarily know if that'll happen. But lastly, the do not lose hope factor here. And this is the coolest thing ever. Let's flip and zoom out on this chart, right? This is what you want to pay attention to if you're a longer term bull like me. Well, not that big mark, by the way. But yeah, right here, that is what we were just referring to, which was the .com bust. And then look at this move up on Bitcoin. I mean, not on Bitcoin, but yeah, maybe on Bitcoin in the future. But again, 20 years later, you would have been a genius to buy Amazon down here, right? So again, yes, I'm a trader. I'm looking for sub 20,000. But if you're one of those people that really believes in it, I think you'll be all right over the long term, at least. It may get scary, but over the long term, I do think you'll be okay. Yeah, so historically, the Fed has done this, right? So whether it's COVID and they come in with incredible amounts of stimulus and loosen monetary policy, and then they freak out the other way where now they're freaking out about inflation, and rightly so. But generally, the Fed has shown a history of, overdoing it and going too fast. And then what ends up happening in this situation, which is what I think is going to happen, is the Fed will likely tighten too much too fast, pushing us to a recession. Now, in the past, when we went into a recession or we were close, they could just come out and print more money. Problem is, now we have inflation near 10%. They just can't print money like they were in the past. So this is a really bad situation for the Federal Reserve to be in. I think the Fed wants to kind of make sure that that inflation number comes down. I think they're talking a hard game. I think they hope to raise rates, but I honestly don't believe they're going to be able to. And one of the things that's pointing in that direction is take a look at the 10-year yield. So this is the 10-year yield chart, and generally it was leading the charge up. Even before the Fed hiked, we had already come way off of the lows here. But look at where we're coming into, this 2.4 to 2.5 trend line. And for me, trend lines mean resistance. That's likely where 10-year yield's going to pull back. And my guess is this will coincide with the market starting to believe that the Fed will not have the ability to raise 6 times this year, like the projections are showing us. So, I mean, again, charts generally will give us that heads up. And the charts right now are saying the Fed's talking a big game. They're going to start to do more hikes, and then it's going to slow the economy too much. And the Fed definitely is all about manipulating things to try to get the end game, as they should. I mean, the problem with manipulation is that it tends to lead to worse outcomes, right? And we've seen that many times over with the Fed. And they try to play a little bit here, and they do this, and then before you know it, it causes a bigger issue. Case in point, if you go back to pretty much every big recession we've had since the 2000 dot-com bust, it's been almost Fed-induced. And what I mean by that is after the dot-coms busted, the Fed came out with these measures of lowering rates and kind of stimulating the economy. Rates got so low, it created the housing bubble, and it made people take too much risk. And that created, obviously, the financial collapse that we saw, where Lehman Brothers ended up going under and a lot of other banks. And now following that, they went into these extraordinary measures, and again, even more so. Rates lower, more stimulus, QE 1, 2, 3, 10, whatever you want to call it. And now it's created an even more risk-taking environment. We've seen it in crypto. We've seen it in stocks with Tesla valuations when it was above $1,200 a share. And my real concern here is that we have to, at some point, have this next collapse. And I think the Fed is going to lead us right down that rabbit hole. And listen, if the Fed had proved it in the past, I'd be more like, okay, they did it last time, but they just don't, right? And they're humans, right? So they generally will go with an emotional response. They're getting pressure from the president right now on inflation. They have to act hard because, in all fairness, a lot of Americans are suffering because of inflation in food and energy. But in general, they need to be much more logical and measured. And I think that's not something that they're getting pushed to do right now. And again, one of the things to keep in mind in the business cycle, and I've been a big proponent of this, is that if you just keep your hands off of the economy, it has its ups and it has its downs. And it kind of looks like this gentle rolling hill, right? You get your up move, you get your down move. When you get kind of manipulation, you get these massive long period bull markets like what we've seen since 2009, where the economy has been growing, and that's not healthy. And what ends up happening is at some point it kind of dies. The economy just collapses. And that's where you get these epic down moves that really hurt more people than if you had just had a small recession every 4 to 6 years. So again, it begs the question of how are we going to deal with this inflation? Now, some of it is the supply issue, right? We have a supply chain that's a little messed up, but there's certainly not everything. When you print the amount of money that the Fed has printed, and don't forget, the government has run up massive debt. They were even sending checks out to Americans during COVID. So it was just more and more stimulus and printing. It's inevitable that you're going to have inflation regardless of supply chain issues.